right. Hello, everyone. Welcome to another financial webinar with the wonderful Jessica Sarter of New York Life Insurance. We are very excited today to be talking about 10 life insurance myths. And I think it's so important that we continue to share this information in the communities that we are in, because if you don't know better, you can't do better. So we definitely want to make sure we are continuing to share this information. If you like what you've been hearing, if you like this series, please make sure you donate to Peaceful Minds Haven so we can continue to put together webinars and events like this. And without further ado, I will pass it over to Jess so we can get into the nitty-gritty.
Yay, thank you so much. All right, so good morning, everyone. As Bianca mentioned, my name is Jessica Sarter from New York Life. We are going to talk about 10 life insurance myths in the African American community. After talking to many members of the community, there are certain myths about life insurance that seem to stand out. And we do believe that these myths have a profound impact on our community, and can lead to a significant number of African Americans making poor financial decisions just because they are unwise and unaware. So in this presentation, we'll examine some of these myths, perception versus facts, the impact of those ideas on the community, and how addressing these issues could dramatically change our community and the institutions within. So welcome. My contact information is here on the screen. You can, take a picture of it, write it down. If you have any questions after the webinar, feel free to reach out to me whenever you want. We do have a disclosure statement that this is an informational and life insurance sales presentation and that individual situations can vary. So we'll go ahead and we'll start with myth number 10, which is that people of color pay higher insurance premiums. So it is said that Black people pay higher premiums than the majority of the other cultures, but the perception it has its basis in historical experience. So there's, redlining was an issue at one point, and that defines the practice of refusing to do business with individuals of high risk or high risk areas. And then racial profiling has a long history in the property insurance industry of the United States, right? But the reality of it is that with diversity in our society, it would be poor business practice for any company to discriminate against a group of people. So we don't even ask at New York Life your race when we're doing your application. It's not listed on the application at all. So we don't know what your race is. The factors that are important and what your premium is based on is your family history, your lifestyle, your occupation, your avocations, and your economy. So one thing about our people, high blood pressure, diabetes, high cholesterol, all of these things are historically more common in the African American community. So an individual who has medical conditions that impact your life expectancy are going to be charged a premium appropriate to that risk. So if the risk is too great, the insurance premium is higher. So that's why it's seemed that it's a little bit higher in our communities for your premium to be higher, because it's all based on your health. And we just as a people don't have the best health, especially as we get older. Your lifestyle influences your life expectancy. So, if you are into risky lifestyle things, right? So if you motorcycle, right? Anything that, skydiving, things like that, that influences whether or not you can get life insurance. Certain occupations carry more risk than others. So maybe if you're a firefighter, you can have a bigger risk. If maybe if you work on bridges, you're an engineer, those type of things, when it's brought up in the underwriting process, can produce higher premiums. And a person's economic wealth condition can influence their health as well. So people who are doing well financially are more likely to go to the doctors more often, take care of themselves, eat healthier. So these are the factors that impact your premiums, not necessarily, or not even necessarily, not your race, right? So which would you rather see? And even in cases where someone's health, occupation, or avocation does result in that person paying a higher premium, insurance might still be the best possible solution. So too often what appears to be the problem, right, which is the premium, people are like, "Oh my God, that's so expensive." But would you rather pay a premium, right, which might be a lot, or would you rather the people that love you, depend on you, would you rather them have to pay for the problem, which would be your funeral or replacing your income once you're gone? So you have to think about that, which you would rather see. Now, what can you do? Because a person's health can change suddenly, it's important to plan while you're in good health. Because we don't know what the future holds, it's far better to have coverage and not need it than to need it and not have it. So you don't know how often I get a phone call, and usually it's after someone has retired or 65 years old, 70 years old. Hey, I retired. I don't have any insurance anymore. I had it through work. Now I need insurance. Well, you're 70 and you have a lot of health complications. It's going to be a lot harder for you to get insurance now than it was if you had gotten it 20, 30, 40 years ago. So take charge. Plan today for tomorrow. And take advantage of your age and your health. You're never going to be this young and this healthy as you are today. I just had a good friend of mine call me. She wants to get insurance for her mom. Her mom is 75 years old and she just had a pacemaker put in her heart. She's uninsurable. So don't wait. That's the point of this. Don't wait. Myth number 9. If I buy life insurance, then something will happen to me. The implication of this belief is that if you purchase life insurance, somehow you're going to pass away. Rationally, we know the probability of death does not change with or without insurance. Some people have voiced the fear that having insurance would be an incentive for someone to like murder them, because most insurance planning is like private between, loved ones. It's more likely than not just the fear of dying and having to be forced to deal with one's mortality. People don't want to have those conversations. People don't want to think about death. But the important thing is protecting those that depend on you. So sometimes it is necessary to have those conversations, right? So no one has managed to get out of life alive. At the end of the day, the two things we can depend on are death and taxes. Neither one of those things are going away. So having or not having insurance doesn't change your probability of dying because you are going to cross that motherland at one point. So if you have a permanent life insurance policy, you could accumulate cash value and you can utilize that cash value while you're living. So you don't even have to die to be able to utilize your life insurance policy, depending on the type of policy that you have. So just keep that in mind. And then myth number 8. I have heard this one a few times. I don't want to profit from the death of my child or a loved one, right? Like you're thinking, oh, if this person passes away, I don't want to get rich off of that. It's not about getting rich. It's not about getting wealthy. It's about being able to, what I say, grieve with dignity. The unexpected loss or even just a known loss occurring could severely drain a family's resources, a family's mental health. I always like to tell people when my grandfather passed away, he left a life insurance benefit for myself and my grandfather. I can't imagine if I would have had to work to continue to provide money for my family after everything that occurred when he passed away. So having those funds allowed me to take a step back, focus on what was important, which was managing his estate, putting my grandmother in a nursing home, selling our family home, et cetera, et cetera. Um, so having that resource was life-changing for myself and my family. And that was my grandfather. So imagine if, something were to happen to your child. I can't imagine if my daughter passed away, how I would even wake up in the morning. So very, very important that you have that ability to grieve with dignity. Um, Transitioning funds can help in so many different ways. Um, the loss of anyone is a lot to manage, is a lot to bear. So having financial support at a time when you are mentally and emotionally stressed is life-changing. Myth number 7. The Lord will provide, therefore I do not need to take action. So the reality of that is confusing trusting in God with relinquishing of personal responsibility. Um, you still have a personal responsibility, right? Like, yes, God is always going to provide. God is always on time. It's his plan, not yours. Trust his process. Yes, absolutely, positively correct. But you still have a responsibility to provide. 1 Timothy 5:8. But if anyone does not provide for this household, he has denied the faith and is worse than an unbeliever, right? So, in an attempt to avoid the temptations of the world and live a more pious life, some people confuse trusting God with relinquishing all personal responsibility for their situation, um, and that's not okay. Um, any person who has the ability to purchase life insurance, and I say has the ability to because not everyone does. Again, life insurance, you buy that with your health. So there are some people who are uninsurable. They might have epilepsy. They might just be overweight, seizures, special needs, cancer, diet, like type 1 diabetes. There are people who cannot buy life insurance. So I believe it is a sin if you have the ability to purchase life insurance and you do not, because you have the ability to protect and provide for your family. So if you do not, that is on you, not anyone else, right? So myth number 6, life insurance is a bad investment, or I only want term insurance. Hey, um, life insurance is one of several tools, and it's not just an investment. It's primarily designed to provide protection. Investments are designed to accumulate wealth. So, although certain life insurance products accumulate cash value, the primary use of life insurance should be for protection. So, while you can utilize life insurance as an investment, it should not be either, but both. Right? So life insurance is there when a person does not have time to accumulate sufficient funds to take care of his or her family obligations. Even after you accumulate wealth, life insurance can be one of the most important tools in efficiently passing that wealth to others and the next generation. So the key to planning is sound advice in a situation. And remember that not one size fits all is a rule of thumb, right? So keep that in mind. Some people have both, some people have one or the other. It depends on your personal situation. Guarantees and promises come at a cost. So life insurance, again, is just one of several financial tools, not the only one. And it should just be there to provide protection. Myth number 5, I have coverage through work and it's enough. The reality is, who's responsible for your future? Is it your employer? Is it your government, your family? No, it's your job to provide for your future. The main objective for a benefit program with a company, usually they are getting those insurance premiums because they get a tax benefit when they provide you with insurance. Usually when you leave the company, that insurance does not go with you. Usually your insurance is 1 times your salary, maybe 2, maybe 3, depending on your company. You have to ask yourself, if something were to happen to me, how long is this going to last my family? If it's 1 times your salary, a year, pass away, wake back up, you're going to do the Lazarus move and wake back up in a year? I don't think so. So how's your family going to function after that 1 year of your salary. They're not. So my rule of thumb is you protect your family, however much money you make. It should be your salary times the number of years it takes for your youngest child to reach an adulthood age, because that's your human life value to your family. Um, Very simple math. You take how much you make a year, multiply it by the number of years, and that's how much insurance you should have. If you don't have that much insurance, you're underinsured. If you do have that much insurance, perfect. Make sure you're doing annual reviews with your insurance provider to make sure that you are properly insured, and maybe you're not even overpaying for insurance. You don't want to have too much insurance. Although I don't think there's any such thing as too much insurance. Your family's never going to be mad at you for leaving too much money. So just remember that your work insurance is probably not enough for you. Myth number 4, my parents did not leave anything to me and I worked hard. My kids can make their own way, they're on their own. Oftentimes, people believe that just because they're okay, their family didn't leave them anything, that they should probably follow along the same pattern. But let's imagine for a moment if your parents had set you up for financial success, if your parents had left behind something in your time of need. Would your life be different? Would it be better? I don't think that there's anything wrong with setting your family up for success. The reality is it's irresponsible, and it's versus responsibility, right? So this is one of those things where it's a mindset. So you have to shift your mindset. If you have the ability to not see your family, not see your children struggle, then you should take that opportunity. You should take that responsibility. You have no clue how many times I hear in my meetings with people, oh, they'll be all right. My kids can figure it out. I got it out the mud. They can too. Like these are real conversations. And I never really know how to respond to those conversations because it makes me question you as a person, makes me question you as a parent. It's one thing to like subconsciously think that, like, oh, okay, I'm good. But especially in the world that we live in today, why would we not want to give our families a head start? Why would we like other communities had like 400 plus years of a head start? We don't want to put $50 a month to the side for our kids to have a better head start. Make it make sense. Um, so yeah, so that's the response. That's the reality of it. It's irresponsibility when you make that conscious decision to not support and plan for your family's future. Getting down to myth number 3. If I leave them a lot of money, they will spend it on somebody else. I have heard this with like husbands and wives, right? Like like, oh, I'm not gonna leave them all that money so they can go get with somebody else, yada, yada, yada. I mean, it's possible. It's possible that if, you pass away, your spouse will move on. Um, every person must decide whether to walk in the light of creative altruism or in the darkness of destructive selfishness, right? This is a judgment. Life's most persistent and urgent question is, what are you doing for others? While it is possible that your spouse or your loved one would move on, what if they don't? What if they can't? What if they are mentally unable to? Maybe they move on quickly. Maybe they don't. What do you want for them? Right? Ultimately is what are you doing for others? Would you rather see that person mentally sane, mentally stable, financially stable, or would you rather see them wallow um, in your loss and your death, and then what becomes of that person financially? Um, it's it's not one of those things where you can just say, set it, forget it, leave it. It comes down to moral obligation here. That's all it is. It's a moral obligation. Um, and the true measure of a man is not how he behaves in moments of comfort and convenience, but how he stands at the time of controversy and challenges. Um, so if families and businesses or even institutions are to grow and prosper to help future generations, We have to be people of character with a long-term view and look beyond emotions of the moment, right? Myth number two, they'll just blow it anyway. The reality is legacy planning begins with education. So if you have a good financial advisor, if you have a good insurance agent, um, they're going to teach and help the next generation. Um, I am blessed that I have not had to pay out any death claims yet, but there are people on my team who have had New York Life write $1 million checks and provide those $1 million checks to their clients because a loved one passed away. It is our duty. We have a fiduciary responsibility as life insurance agents, as your financial services professional, to help you use that money in a proper way, to help you invest it, to plan and put it in action for you. If you have an agent who you work with on an annual basis, they're not going to let you blow it. I mean, ultimately, you do what you want to do with your money, but it is our job to help you with that money. I would never give my client $1 million check and say, here you go, and leave you and not give you financial education, financial resources, tools to help that money continue to grow and work for you. So with that being said, it comes down to education, it comes down to financial services. And that's why we're here today, right? So this conversation is about life insurance, but we have had conversations about investing, right? We have had conversations about opening up brokerage accounts and saving and things like that, right? So the reality is, yes, it is very possible for someone to blow $1 million, $100,000, but we are here to help you make sure that does not happen. Last thing, last myth, I only need insurance to bury me. This is the most common belief in our community. And it has stemmed from the olden days where when life insurance was first introduced, people of color were not allowed to buy life insurance. And when we were allowed to buy life insurance, we were only allowed to buy enough to bury us. So other communities were purchasing millions of dollars in life insurance and utilizing them and putting those monies into trusts and building generational wealth. And we were only allowed to buy $15,000 policies just to bury us. So when we got the right to purchase more insurance, we were already conditioned to just have enough to bury us. So if you notice in our community, grandma, big mama, probably just had enough, right? Like I remember when my grandmother passed away, she had a $15,000 policy, just enough to bury her, 12 kids, $15,000. That's it. Because that's all we were allowed to have. That's all we were conditioned. Now we have the right to build generational wealth. And life insurance is the easiest and quickest way to build generational wealth. So don't squander that right. I tell people that all the time. You have the ability to create generational wealth for yourself, for your children, for your grandchildren. Human capital is the value of your future earnings. You are worth so much. Your human life value is worth so much to your family. And especially in today's environment. I look at the last month, look at the last 2 days. They're just the ability to purchase life insurance should not be taken lightly. Yeah, that's about it, right? So we're down to myth number one. Provides a false sense of security, can close the mind to further discussion, and every generation has to start from scratch if you do not plan properly. So will you be the one to address the beliefs and the impact that they have on our community? Or you decide to continue to not, someone has to break the cycle. And especially this last belief, it's just enough to bury you is not enough to leave a legacy. So when you work with an agent, your life insurance agent can show you strategies for using insurance and help you achieve your financial goals. There are different types of insurances. There are so many different types of insurances, it'll make your head spin. IULs, VULs, whole life, term life, ULs. Um, it's important that you speak with someone to make sure that you are covered properly, to make sure that you have the best assets, to make sure that someone can provide you with an overall an overall analysis of your current situation, where you are, where you want to be, and help you plan to leave a legacy for your family. If you have any questions, let me know. Feel free to reach out, give me a call. I don't have any problem answering any questions. You can call me, text me, smoke signal me, doesn't matter. I'm here to help and guide our community. And with that being said, I'll pass it back over to Bianca.
So I actually have a quick question.
And
So,
I yes.
we are trying to dispel these myths, right? That all of these myths that you were talking about, we're trying to dispel all of them. My question to you is how and what can we do as a nonprofit in the communities to change the shift in mind about their relation to money and life insurance and them thinking like, oh, if I buy this, then someone's going to try to get me. Like, how do we change that messaging? Because I think it's so important that we understand that this can change. This can be a generational curse breaker thing if you understand how to do this, like to make those priority shifts from I'm gonna buy the new Jordans to I'm gonna invest in my future and my family's future.
I mean, it's you got to keep doing what you're doing now,
Mm-hmm.
right? Like it's hard. I just had this conversation with someone the other day. It's hard in our community because we've been conditioned for so many years.
Yeah,
Like we've,
forever,
yeah,
really,
forever.
forever.
Forever. We've been conditioned to think this way. I mean, money stays. I don't know what the statistic is, but in our community, we get money and then
Mhm.
we immediately spend it. Like we
Yeah.
don't even hold on to it for like a day. Like so we have a lot of unlearning to do.
Yes.
All you can do is continue to educate, continue to do these webinars,
Mhm.
and hope that people are receptive to listening. Um, but it's hard. It's very hard.
Yeah, it
I
is.
I try the same. I try, I call people. I'm like, hey, let's meet.
Mhm.
Let me help. You have
I
questions?
think they're even afraid to talk to you. Like, I
Yeah,
think they're even afraid to have that conversation about money because, like, I don't have money, so why would I even talk about it? So it's like, in order
exactly.
to have money, you have to talk about it. Like,
Yeah,
that is the
I
first step.
I have been a client of New York Life for 12 years.
Mhm.
And I remember when my agent reached out to me, I was making 37,000 a year. And I was like, I don't have no money for you. What are we gonna talk about? Like, and
Right.
he was like, well, do you want that to be a long-term problem or a short-term
Mhm.
problem? It's not always gonna stay that way,
Right.
right? And lo and behold, like I've gotten raises, I've gotten married, I've had planning to have another child. I've bought a house, sold a house, moved. Life is not linear. So
Right.
throughout the whole process, he was there helping me make proper financial decisions. And
Right.
so I always say this, I'm in a much better financial space than I would have been if I hadn't taken that meeting with him 12 years ago. And
Mhm.
now I work here. I work here because I fundamentally believe in what New York Life is doing.
Right.
Um, and it's not just about life insurance, right? Like, yes, I have a lot of life insurance. I know we've talked about that before.
Yeah.
Like my family, sometimes I'm like, shoot, just kill me. They'll be all right. Because Lord knows if I go, they
Right. They'll be set.
popping. They are
Mhm.
popping. Um, but it's one of those things where it's not just about life insurance, it's about
Yeah.
investment. When I am 65, I should have enough money in one of my assets to buy a boat. Like
Right.
I'm chilling.
Hmm.
People don't want to have that conversation. People don't want to be disciplined
Yeah.
in putting, that money to the side. And it's hard. I
It
mean,
is.
I know it's hard. And that's one of my things. Like when I'm talking to clients, I want you to still be able to live your life. I
Yep.
want you to still be able to buy eggs.
Hmm.
but you might have to not go to Chick-fil-A this month one
Right.
time. One trip to Chick-fil-A is $40 for
Mhm.
my family. So maybe you don't go to Chick-fil-A one
Right.
time a month.
Look, when I first reached out to you, I was only making around like 18 to 20,000 a year. It was not anything impressive. But you were like, look, we could do something for like $20 a month. And I'm like, okay, I don't really understand what I'm doing, but I know it's important because
I know I need it.
know, and really what made me even have the conversation was my brother spoke to you first. And so then he came back and he was like, I really think that this is something you need to talk about now that you have your son. And I'm like, I don't really want to talk about like, life insurance. And I felt uncomfortable. But after talking to you, it made so much sense. And I think if people can get over that feeling of this is an uncomfortable conversation or I don't even know if I can afford this, have the conversation first. The conversation is free to have, and it can really help you to grow into the adult that you need to become
Yeah.
and make better decisions. Like, this is stuff that my parents didn't know about. And that's no fault to them because
Mhm.
their parents didn't know about it because that information was gate kept from them essentially.
Yeah.
So I kind of feel like we do have this responsibility to, now that the information is so accessible, to take it and learn it so we can pass it on to our kids to level the playing field. Because, like you said, these other people have had 400 years of this information.
hmm And
So,
we just got the right. And
and
Lord, I hope
just
it doesn't get taken away from us.
there are people trying. There
There,
are people trying. So now is the time. Get your things set up
get
and
it
ready to
together.
go.
Get it together. This
Yes.
is not the time to be out here. I,
Right.
if
Uh,
every Black person in America had insurance, they'd stop killing us.
Yeah,
They would. They'd
I
stop
know.
because then we'd have too much wealth,
That's absolutely right.
and they don't want us to.
So to me, it's an act of rebellion. I've got my Black History Month earrings on. I am
Oh,
celebrating this month harder than ever since they're trying not to celebrate it.
somebody has
Yes,
to.
every act of resistance, every act of rebellion that we can do, we need to be doing right now. So if you're watching this because you have, questions about if life insurance is something you should consider, absolutely. This is your sign. Consider it and reach out to Jess. She has all the answers. So
Yeah.
thank you guys for tuning in, watching. Make sure that you like, comment, and subscribe and hit that donate button so we can bring more wonderful education and information right to your door. Thank you, Jess.
Thanks.
Bye-bye.
Bye.